Hey guys, I apologize. We completely did not have time to post the biggest secret about market crash in 2018. We've been so busy trading. But here it is. Today, I've got a few minutes to reveal to you the biggest secrets of all secrets about the market crash in 2018. So I hope you're ready for this, okay? Because you probably are not going to like it. If you are a permanent bear, you will hate this. Here's the biggest secret about the market crash in 2018. The crash is over. Whoa. Well, we didn't see that one coming, Leonardo. What's going on? What are you going to call the market bull 2018 now? You going to rename the channel? No, guys. Hey, here's the deal. If you don't know why we called the channel market crash, okay, it's because most of our strategies, they're short-term strategies. And because stocks, they drop much faster than they go higher. And because we utilize weekly options expirations, it is generally to our advantage to profit when stocks fall. And if you're trying to learn more about that, hey, we've recorded some really good courses. If you're trying to aspire to be a better trader, to profit on the short side, definitely check some links below this video. But in this particular video, I'm just taking a few minutes to show you specifically why we think the worst is over, why we think the crash is over. And I know if you're listening to a lot of channels out there like CNBC and Bloomberg and stuff like that, it seems like, lately in the last couple of weeks, everybody is just so negative. They're so bearish. They're so crazily just think that it's going to get so much worse. Well, guys, we've been actually starting to short stocks, right? When Amazon was $2,000, $2,050, we've set a target price on it at $1,500 and then hit the target price just 2 days ago. And so we've been busy, actually, you're not going to believe what we've been doing the last couple of days. We've been busy buying calls. But for the purpose of this video, I'm not going to go into too much detail. I'm just going to show you the charts. So here's February 2018, the chart of Dow Jones. I want you to just point out a couple of things. I'm going to show you 100% everything in here. If you want to learn more, you can take the chart course. But here's the deal. Okay, this is the RSI index, the relative strength index. This is right here is February. This was the biggest drop. Remember when it was all over the news how the market was crashing. I want you to take a look at this part of the chart right here. So that was January. That was the climax. That was when everybody was a bull. And if you mention the crash to anybody at that point, which we did, they thought that you completely lost your mind. That's how brainwashed people were. Well, what was the best time to short stocks? In other words, to profit when stocks drop? Well, it was right here. So that's what we're doing. But nobody saw that coming. Just like nobody saw this complete major drop-off that started on October 1st. But right now I want you to focus on the purple dots, the purple action. Okay, so here's the drop on February 2nd, 2018. Notice the formation of this candle. Notice this big tail right here. Okay. I also want you to observe this big tail right here of this candle that was formed on February 9th when the markets hit all-time low for the February in 2018. Now notice this interesting phenomenon right here. See what happens to the RSI? The markets actually dropped significantly lower, but what happened to the RSI? The relative strength for the market, the relative strength for pretty much the stocks, okay? It did not go lower. Now notice I also want to bring your attention to this right here, guys. This same type of the formation of the candle. Now fast forward a little bit further, October 2018, daily chart on Dow Jones. What do we see? What do we see, guys? Well, here's the low that was set on October 25th. Here's the low that was set just a day ago. Check this out. On the 29th, on Monday, right? Well, fast forward a little bit. Monday, we're advising a bunch of our subscribers, our VIP alerts, and launch subscribers to short the market. And so we did when it was going higher. Well, look at this. The same type of candle formation. I want you to observe the candle formation right here. Happened that day. Okay, and so when the following day, the stocks could have dropped lower and they didn't, we said buy calls, start buying calls. And this is a longer term chart. If I have time, I'll do another video specifically going into detail, showing you how you could have actually identified the reversal, which have come very handy if you are a short-term trader. Now, if you're a long-term trader, it could be quite useful as well, because instead of continuously shorting the market, you could have already had significant profits just over the last couple of days. But notice what happens to the RSI, that relative strength index to talk about, right? So when the stocks were falling just a week ago on the 25th, look where the RSI was. Boom, it was right here. The markets fell lower But what happened to the RSI? Oh, same situation as in February 2018, just a week apart. It did not go lower. So the markets fall lower. The strength does not weaken. It does not fall. So that is called a bullish case of divergence between the price action and the relative strength index. Let me portray this just a little bit further. Okay, so here's the Dow Jones Industrial Average, looking now at the weekly chart, guys. So notice the candle formation. This is a bullish reversal type candle. So here's the long tail sticking out right here. Here's another one right here. Here's another one. Look at this one. Okay, so this one just took place. Okay, and coincidentally, it's right around, see, some of these levels are not going to be precise. It's right around this level, which makes us think that, hey, based on what we're observing, there's a good chance we're going to move higher from here, not lower. Okay, you're going to say, well, it's Dow Jones. Who cares about that? Okay, let's take a look at S&P 500 on February 9th, 2018. What do we have? Again, we're going to take a look at the purple action. The RSI, 0.1, coincides with this point right here, which was February the 2nd. A week later, on February 9th, the relative strength holds. It does not drop. But what happens to the market? The market does drop significantly lower. It exactly resembles the situation that happened over the last week. Another bullish reversal type candle formation. Just notice when you see these candles, right, they signify that the market is reversing, although sometimes it is reversing a little bit lower volume. It may be confusing. Taking a step further, S&P, October 31st, 2018. Daily chart. What do we see on daily? Okay, do you see the relative strength index right here? Do you see where the market was? Boom, right here. Do you see this one? We go way lower, but the relative strength does not drop. Okay, boom, there it is. We think this was the low right here at 2603 on S&P 500. Okay, moving on. Weekly chart. Do you see the way these candles are formed? 1, 2, 3, boom, handled. Okay, the reversal is in the making, and we actually should be heading much higher from here. Much higher, guys. Now, you're going to say, okay, well, hold on. Not so fast. What about this gap that you told us that, you know, we set a gap lower? You said that in one of your videos like last week, and you said we're heading much lower. Yeah, and since then, we did head much lower pretty quick. At this point, we're changing our view entirely. We think right now we are going to reverse much higher. It does not mean that every day we're going to go higher. Again, what makes me believe that is that the least resistance now is to the upside. In fact, we've today actually formed a bullish gap higher. So see, this was a bearish gap lower. This is a bullish gap up higher, which coincided with all the markets universally around the globe. We had, you know, Japan and Hong Kong and Singapore, and all of these stocks are rallying higher. Guys, even the Brazilian stock market is moving higher. Look, when all these things, they kind of come together, look, the path of least resistance is going to be to the upside. And with as many negative things as we had, look, everybody was a bull here. It was easy to be a bull. We were a bear right here. So now everybody is a bear, and we want to be the bull. Why do we want to do that? Well, not just because we want to be a contrarian, but because it pays to be a contrarian when you're a short-term trader. You can spot these huge reversals. Okay, this is where the money is made on weekly options. And oftentimes, if you can determine the right side of the equation, that's going to help you no matter whether you're trading just the indices, no matter whether you're trading the certain stocks. If you're on the right side of the equation, this surely makes your job a lot easier as a day trader, swing trader, you know, any kind of trader you are. If you're trying to get better results, understanding some of these things should definitely help you out. So you're going to say, whoa, hold on, but isn't that like a bearish reversal candle? Like, yeah, okay, well, I get it. This is a bullish reversal. This is a bearish reversal candle. Okay, yes, but these stocks are holding this level of 2,700 on S&P today really strongly. And we've noticed that institutional investors, they are back to buying the dips. And I'll try to give you a little bit more information on that as we're going for the analysis of what Amazon stock is doing. How did we spot the reversal? And so if you're curious to actually find out how do we spot the reversal on Amazon, check out the next video. Just check out the next video. Okay, here's what we got. Okay, we actually have MACD starting to turn in this direction. And we got a little uptrend right here being created right here. So a little bit pickup of accumulation distribution. So it doesn't mean that we're completely out of the woods. if we don't break this negative gap down. But for the meantime, 2750 is the next level on S&P 500 we're observing. If we break this gap, we're going to be above the 200-day moving average, and I think that's where a majority of the investors are going to start coming in and buying the stocks on large volumes. Okay, with this being said, okay, take a look at the S&P October 31st. Okay, again, look at the same candles. Look, and I'm not going to give you an example here of NASDAQ, but trust me, if you go to stockcharts.com, you don't need to subscribe. Just use the free version of the website. Plug in these indices, you're going to see the same things. These bullish reversal type candles, they're all across. We think that was the low. 2603 was the low on S&P 500. Short term. Okay, now, here's a historical question. And this is very, very important. If you can answer this question, guys, you will understand why the market is going to rally in November. Here it is. What stopped the crash in 1987 besides the Federal Reserve intervention to provide extra liquidity? Again, the question, what stopped the crash in 1987 besides the Fed stepping in? Well, here's the answer. The answer is the buybacks. So at the crazy low prices, after the 20% correction on that one single day, companies started coming in and buying their own stocks. So they created a huge support level. And so they definitely took advantage of that. So here's the case, or actually one of the reasons why we believe the market is about to reverse and go higher. Here it is. Here's the main point of this video, okay? Stocks are currently down 20 to 40%. Everybody's incredibly bearish. Everybody's now talking about the crash. And pretty much every time you turn on the news, they're talking about the crash, the crash, the crash. So to us, the sentiment is over bearish. And so during those times, a lot of financial institutions, they like to do what? They like to come in and they like to buy low and sell high. And so do the companies that buy their stocks back. It's an ideal situation. If their stock is down 20, 40%, and look, just in the case with Amazon, right? The stock is down, 25, 28%. Since the high of 2050, it went all the way down to 1490 just a day ago. So what would be a better time for some of the companies to actually come in and buy their own stocks back? And I think that's going to set the floor, and that's what's going to move the stocks higher. So November, historically, is the biggest month for buybacks. Combine these two factors, the stocks are down 20, 40%. Overall sentiment is extremely bearish. Okay, this creates a really great buying opportunity. Yeah, the economy is slowing. There's a lot of things that are going on, but this is not the time for the crash. And here's what's going to happen. Why do I think they're going to buy more stocks now than ever? Meaning the companies are going to buy their own stocks? Well, because clearly everybody is 100% decided on a interest rate hike in December. So if they're going to borrow money, which they're locking in their credit facility to buy these buybacks, right? Don't you think they're going to want to do it at a lower rate rather than after doing it after the rate hike in December? So there's the answer. This is why we're actually extremely bullish in the market right now. Again, it does not mean that the stocks cannot drop tomorrow, that they cannot go higher the next day, drop again. And so, overall, what we're saying is overall the markets are not going to drop much lower. To us, the way we look at this risk-reward type situation, I think the companies themselves and some of the institutional investors, they've been showing signs that they're actually coming in and they're starting to buy this 20, 40% drop with some of the stocks. And we think that the behavior is going to intensify, of course, after next Tuesday, after the election is out of the way. We're actually going to be in November, where historically it's the biggest month for stock buybacks. And at these levels, I think more companies are actually going to come in and buy, establishing a really good floor for the stocks to not continue to drop. So thanks for watching, guys. If you have not yet taken the chart course that can help you identify things before they actually take place, definitely click the links below. Schedule a 20-minute complimentary trading options coaching session with myself or a senior trader. Get all your questions answered so you can make this year your best trading year ever. Thanks for watching again. I'll catch you guys in the next video.